Hi, it's Michael Farr from Farr, Miller and Washington. Thanks for tuning in again for this week's market commentary. I'm going to give you a different message today, and one that I don't offer all that often. But first, the numbers. The Dow Jones Industrial Average and S&P 500 Index are both trading right near their all-time highs. They've made a couple of new all-time record highs in the past few days. 18,350 for the Dow Jones Industrial Average, 2150 for the S&P 500. The dollar is off of its highs at $1.11 versus the euro. Oil has come down below $45 a barrel, 44 and change now, and that's down from the low 50s. So we've had a pretty good pullback in the price per barrel of oil. Gold, $1,341 an ounce, and the 10-year Treasury now at 1.46%. That's down. Remember, prices go down and yields go up. That's down from when yields were 1.36 a week and a half ago. So a number of indices are pulling back off of their all-time highs, and the reaction to Brexit, while dramatic, has fully recovered. Stock prices making all-time highs is something of a concern, and my call is that we are now clearly overvalued in stocks. An overvalued situation can last a long time. If you are a speculator, it is a cause to raise cash and to sell if you're a short-term trader speculator. If you're a long-term investor like Farr, Miller and Washington, then like Farr, Miller and Washington clients, then you have to take a close look at your portfolio, I think, and find out where you might have appreciated too much, where positions have grown too much, and begin to trim those things that represent greater risk and look for opportunities, and they still exist, in other stocks that perhaps have underperformed, that haven't done very well. I've been talking about the bank stocks for quite a while as still representing some good opportunity. I don't know that we would be adding to anything for a bit, but right now I think defense should be the order of the day. Make sure that you own companies with good, strong balance sheets that can endure. If you are an older investor, you should not have long-term money, short-term money tied up in long-term investments. Don't have short-term needs tied up in long-term investments. That's true for everybody, but particularly older investors who don't have a decade more to invest. Take a close look there at your cash needs and make sure they're available to you. Otherwise, while the path of least resistance for stocks continues higher, it won't last forever. The market will correct. We will go down, we will moan and groan, and at some point thereafter it will recover. Investors with long-term time horizons that are invested in good companies ride through situations like this. I don't believe in market timing. I don't believe that you sell out and hold cash because you're not going to know when to get back in. Just at the right point, when you should get back in, you or someone near to you will convince you that things are going lower, and that will feel safer because it will have come down pretty low to that point. Emotions are the toughest things that you ever have to fight as an investor. So be prepared, be thoughtful, understand this is a very expensive market, it's overvalued, and you need to be cautious. If you need a little help, give us a call at Farr, Miller and Washington in Washington, D.C. on a really hot, balmy July day. Thanks for joining me. I'm Michael Farr.